The US stock market has a fascinating history, one that's been shaped by innovation, war, and even pirates. In this video, we'll explore how the US stock market began and evolved into what it is today, uncovering some surprising details you might not expect. Long before the New York Stock Exchange, trade in America was essential to the economy. Colonial America in the 1600s saw the rise of local marketplaces where farmers, merchants, and traders exchanged commodities like tobacco, grain, and furs. But there was no centralized stock market yet. It was informal and local, often relying on word of mouth or handwritten ledgers. One of the first exchanges of futures contracts in America was actually centered around tobacco, which served as a currency in some colonies. Things started to change in the late 1700s. The US had recently gained independence, and the need for a more organized financial system was clear. The Buttonwood Agreement of 1792 marked the official start of the New York Stock Exchange. 22 stockbrokers gathered under a buttonwood tree on Wall Street in New York City and agreed to trade only with each other, effectively creating an early form of market regulation. This agreement wasn't some long legal document. It was only 2 sentences long, and it was not signed in an office, but on a street under a tree. This is how the tradition of Wall Street open-air trading began. Let's jump back a little bit. Although the US stock market started with the Buttonwood Agreement, its DNA can be traced back to Europe. The world's first stock market was established in Amsterdam in 1602 by the Dutch East India Company, the first company to ever issue stocks to the public. This allowed people to buy shares and own a small part of the company, and it proved to be incredibly successful. Now, this is where pirates come into play. The company had a direct connection to privateering, which is state-sanctioned piracy, which was common in European trade routes during the 16th and 17th centuries. In fact, a major part of early wealth-fueling stock markets came from privateers capturing enemy ships loaded with valuable goods like spices, gold, and silver. Privateers were essentially licensed pirates operating with permission from the governments to seize ships of rival nations. The profits from these ventures would then be shared with investors back home. It's a wild thought, but the roots of the stock market were partly funded by the risky high-reward business of piracy. Throughout the 19th century, however, the US stock market began to take shape as the country expanded. The market played a key role in funding America's rapid industrialization. Railroads became one of the first major sectors to be heavily traded, with railway stocks making up 60% of the US stock market by the 1850s. By the 1860s, banks and steel companies followed, giving rise to powerful industries funded by investors. In 1867, the first stock ticker printed the prices of stocks on a continuous ribbon of paper, changing the game for traders who no longer had to rely on messengers to carry the prices back and forth. The US stock market has certainly seen its shares of highs and lows. The infamous low point was the 1929 stock market crash. In a span of just a few days, the market lost billions of dollars in value, wiping out fortunes and triggering the Great Depression. October 24, 1929, now known as Black Thursday, the Dow Jones Industrial Average fell by 11% in just one day, and by the end of the crash, the market had lost almost 90% of its value. Fun fact, not everyone lost money in the crash. One famous investor, Jesse Livermore, made over $100 million by short-selling stocks right before the market tanked. This disaster led to major reforms. In 1934, the US government established the Securities and Exchange Commission, or the SEC, to regulate the market, promote transparency, and protect investors. It's one of the reasons why today US stock exchanges are some of the most heavily regulated in the world. Fast forward to the modern era, and the US stock market has become a juggernaut. The NYSE remains the largest stock exchange in the world, with a market cap of over $23 trillion. There's also the NASDAQ, which has become the go-to market for technology stocks. Companies like Apple, Microsoft, and Amazon have made NASDAQ a household name. In 2021, the global stock market was valued at over $95 trillion, and the US accounted for nearly half of that value. Though Wall Street today is the heart of stock trading in the US, much of the actual buying and selling is done digitally. In fact, over 90% of all trades on the NASDAQ today are executed by algorithms, not by human traders. The US stock market has come a long way from traders meeting under a buttonwood tree to the fast-paced high-tech market it is today. The stock market is a reflection of the broader changes in American society and the global economy. And with digital advancements, it's still evolving. As always, thank you for watching. Make sure to like, subscribe, and hit the notification bell to stay up to date with more deep dives into the world of money, history, and education.